Let's now bring in our next guest. He's one of my favorites to better help us understand all the market volatility and the state of play. Michael Reinking, senior market strategist here at the New York Stock Exchange. My man, good morning.
Good morning. Thanks for having me.
Got to start with CPI. We're about a half hour off the print. Cooler than expected. We're seeing futures respond. What did you see in the numbers and your expectations for today's session?
Yeah, so we did see the numbers come in a little bit better than expected, and we're seeing a little bit of respite from the markets as we've seen kind of a pretty significant pullback. So yesterday at our lows, intraday, the peak to trough, the decline in the S&P 500, slightly exceeded 10%. For a brief moment in time, we kind of reclaimed that 10% level at the end of the day. But the CPI report today, both on a headline and core basis, was a tenth better than expected. We did see, food prices actually showed some deflation outside of eggs, which was a positive, right? And then there were some surprises within the report. Auto vehicles or vehicle prices were down 0.1%. There was some expectation that would be higher ahead of tariffs, right? So that was a little bit of surprise. We saw a very big moderation in vehicle insurance, which was also, that's been a big driver of inflation over the last couple of years. So that was a little bit of a positive, right? And then we also saw kind of airline prices fall 4%. Right, and we heard from Delta yesterday with their negative guidance, so kind of that kind of reiterates that.
Yeah, some of those recession concerns may be back on the table for some analysts as they look at what Delta had to say yesterday here. This is a favorite stat you and I have talked about as of late. Is it 7 of the last 9 sessions? There's 2% volatility swings intraday. What does that tell you about the state of things? You hear one announcement at 10 a.m. You have one thing, something else at 2 o'clock. What do we do with that?
Yeah. So, there's been quite a bit of volatility. We've now seen the VIX kind of move into the mid to high 20s over the last couple of weeks. As you pointed out, there was kind of 7 of the last 9 sessions. We've seen an intraday range in the S&P 500 exceeding 2%. To put that in perspective, there were only 11 sessions in all of last year where that had happened, right? So that kind of puts that volatility, in perspective. We've seen kind of a couple different waves of what's been happening, kind of over the last week. We've unwound, some of the excesses that we had, kind of at the end of the year. There's been a reset in thinking around, kind of Washington policy, right? And then we've also just had some broader de-risking, which is kind of the phase that we're in, kind of right now.
Got less than a minute. Treasury Secretary Scott Bessent says he thinks the U.S. economy is in for, as he calls it, a bit of a detox period. Michael, how do you read comments like that?
Yeah, so that's one of the things that markets are really trying to digest, right? So we're seeing things happen in the opposite fashion than we did in Trump 1.0, right? Where we had positive growth policy to start to start during their administration, followed by tariffs. This time around, it's flipped, right? And they're putting in these kind of negative growth, policies like cost cutting at the government, like tariffs, right? And then I think there's this expectation that they will start to shift to the more pro-growth side of things as we get a little closer to the midterm elections. So from a sequencing perspective, that kind of makes sense. Markets didn't necessarily take them at their word. Kind of initially, we're now starting to see, as tariffs are kind of being put in place, that the administration is pretty serious, and they're kind of pointing to the fact that they're okay with some of this market weakness.
We'll see what happens today, what investors have in store. Michael Reinking, senior market strategist here at the NYSE. Michael, thank you as always.
Thanks for having me.